so in today's life, I'll be talking about a very, very important topic: how to invest in the Nigerian stock market. How to invest in the Nigerian stock market. Welcome, everybody. My name is Modupe Vincent. I am a certified financial planner and also a legal practitioner with over 20 years experience. And so I want to welcome you into today's live, and I want to know where you're watching from. Please put in the comments, let me know where you're watching from, where you're joining me from. So I want to ask you this morning, have you ever invested in the stock market before? That is what we want to talk about: investing in the stock market, what it entails, what is investing, how do you start this journey of investing. That is what we are looking at today: how to invest in the Nigerian stock market. So what exactly is investing? I'm going to bring this topic, say it in a very, very simple way, in a way that even a child can understand it, because my aim is to ensure that you start investing no matter how small. And if you have been investing, to encourage you to keep investing, because what you're doing is that you are securing your future. So what exactly is investing? Investing is just simply you putting your money to work for you, putting your money somewhere so that your money will grow over time and your money will earn more money from it. Most times, most of us, what we do is that we work for money. Some of us have businesses and some of us go to work, from 8 to 5. What we're doing is that we are working for money. When it comes to investing is just simply you not working for that money, but that money working for you. So just as you are going to work, waking up every morning, when it comes to investing, your money is actually making money. Your money is also going to work and also making money for you. That is simply what investment is all about. So it's like you planting a seed. You are sowing a seed, and then with time, that seed will grow. And you know that anytime a seed is planted, the seed will never come back, as it was planted. What I mean is that when you plant a seed, the seed will germinate and the seed will come up, with so many other harvests. So you may sow one seed. The seed will not return as one harvest. It will come in a multiple of ways. Thank you so much. Good morning to you. Welcome. Thank you for joining us today. Thank you. So as we go on, if you have any questions, please put down your questions so that I can answer them as we go along. So that is simply what investment is all about. So when you invest, you are sure of a return, no matter how small. Let me also say that when you invest, there are different types of investment. But for today's video, for today's life, we're focusing on the Nigerian stock market. So whether you live in Nigeria or you live outside of Nigeria, you can invest in the Nigerian stock market. And so we want to just look at why is, oh, thank you so much. You love my hair. Thank you so much. Thank you. So investing in the stock market. Why do we invest in the stock market? Investing is one of the ways by which our money grows. Investing is one of the ways by which our money, we're sure of a return. What we're doing is that we're preparing for our future. And that is why we always encourage people, don't just save your money, endeavor to start investing your money. And one of the ways by which you can invest your money is into the Nigerian stock market. We'll go into details, but it is important because when you invest, there's so many things. Your money beats inflation when you invest. Your money grows. you are getting assets, and that is simply what investing is all about. But learning about investing in stock market as Nigerian in Nigeria, fantastic, fantastic. And I hope that this video will actually help you to learn more and prepare yourself more as well. So the Nigerian stock market gives an opportunity for you to become a part owner of a company. Any company. It could be in the banking sector, it could be in the technology sector. But what you are doing when you buy a share is that you are saying that I'm also a part owner of this company. So what is a stock? When we talk about owning a stock, having a share in a company, I have a stock. What are we talking about? It's just simply you having a part ownership of that company. So whenever you say, oh, I have bought shares, we're using examples, maybe in Access Bank or in Zenith Bank or in Dangote Cement, in Nestle, what you are saying is that you are also a part owner of that business. So whenever the business does well, it means that you are also going to get a return, a profit for what you have put in to that company. So let me ask at this point, is this clear? Can I go on? Simply, that is what buying a stock or owning a stock is all about. So like I said, when the company grows, your own money, your profit also grows. And so the way a company rewards you or say thank you to you is by giving you a dividend. When they give you a dividend, you are getting a profit. Thank you so much. Very clear. So I can move on. So let us say that you want to have a bank, or you want to have a telecommunication company, but you know that you don't have the resources. So the best thing for you to do is to buy a share in that particular, from a particular company. So let us look at the steps to take to start investing. Simple way, you have two choices. You can either buy online or you can buy through your stock broker. Let me explain this. There are some online apps, which enables someone to buy stocks online. I'm just going to be using examples, not necessarily that I'm recommending these online platforms. Like and subscribe, guys. Let's get the life ranking. Thank you so much. God bless you so much. So you have, for instance, you have the Bamboo, you have the Carrywise. These platforms enables you to start buying online. The other method is the traditional way, whereby you approach a stock broker, because the stockbroker, they are the ones that have they are licensed to buy and sell shares. That is another way. And so how do you go about it when you say that you want to go through the stockbroker? So the first thing you do is that you choose a stockbroking firm. There are so many. Like I said, I'm just going to be giving examples, not necessarily that I am encouraging you that is a particular one that you should buy. I don't have a good experience with Bamboo. Their charges are too much. Okay, fine. Thank you for sharing your experience. I just use that as an example so that you can understand what I'm talking about. So the first thing is that you should choose a stockbroker. There are so many firms. You have ARM, you have Stanbic IBTC. These are just examples so that you can have a clear understanding. So what you do is that first of all, you choose a stockbroker, a licensed stockbroker. Then the second thing is that once you approach them, you open a CSCS account. A CSCS account. That CSCS account is a central, what it means is Central Security Clearing System. And that is where, when you start buying your shares, that CSCS account is peculiar to you. It is your own account. So that by the time you start buying shares, that is where your shares are being kept electronically. That is where your shares are being weighed out. are being put, are being stored. So you get a stockbroker, a licensed one. You tell them, you fill their forms, and some of them also you have to also pay, that you are joining them, that you want to start using them. You pay a fee. Some of them is 7,000, some of them 5,000, some of them 10,000, depending on that stockbroking firm. And then once you open your CSCS account, you begin to fund the account. There's no limit from which you can start buying. You can put in 5,000, you can put in 10,000, but the journey of you becoming an investor has started. So once you have funded your account, the next thing is for you to start buying shares. So it is as simple as that. That is a way by which you start, buying shares from the stock market, because we all cannot just go to the stock market and start buying. You have to go through the stockbroker, and that is why they are there. So it is as simple as that. It is as simple as that. 5,000, 10,000, you start. The journey has begun. So what the next thing we want to look at is that the common mistakes that investors make, that people make, and these are mistakes that we must avoid. The very first thing is that as an investor, don't exactly, you are right. So expecting quick returns, no. Because some people say that, I put in so much amount of money and I haven't received, so much. So that is one of the mistakes you should avoid, as expecting quick returns. No, avoid that. The second one is investing blindly without research. You heard that there is a hype. It is this bank that is doing well, or it is this company that is doing well, and then because of that you start investing. That is a mistake that you must avoid. Don't follow hype. Don't follow people have said this, and then you start buying just because on the basis of that, the rumors, the hype. No, it is a mistake that you must avoid as a stockbroker, as an investor. Another thing is for you to put all your money in one basket. One thing I talk about is diversification. Diversify the money that you have. Don't say, I'm only going to put my money in I'm only going to put my money in the banking sector, or I'm going to put my money in the telecommunications, or just for food, beverages. No, don't do that, because things may happen that would affect that sector, which in turn will affect your own money. So the best thing is try to diversify, no matter how small. If it's a 5,000, it's a 10,000 that you're starting with. Start, and then gradually you grow your portfolio. Portfolio simply is just what you have, the things that you have, the stocks that you have. That is what I mean by portfolio. We're going to look at sometimes, and we're going to explain it more and more. Thank you so much. Welcome as you come in. Thank you. Let me know where you're watching from. So I want to quickly explain to us my own personal tip as a certified financial planner, what I always encourage people to do. So as I advise women and families, I always tell people that when you want to start this journey, you must set your goals. What is my goal for investing? Why do I want to start investing? Is it because I want to, plan for my future, for my retirement? Is it because of my children's education? There must be a reason, your why you want to invest in shares in the stock market. So the very first thing is set your goals. Your goals, they must be smart goals, but you must set your goals. Have a reason, have a why. The second thing is that I always tell people, never invest in something that you don't understand. If you don't understand that thing, please don't invest in it. Another thing I always encourage people to do is that they should reinvest their dividends. So whenever you are paid a dividend, as you are starting out, some people out of excitement, they get their dividend, they see some money, they just cash it. I will encourage you that you should please reinvest that dividend, that money, that profit that you are being paid, keep it. reinvest it, put it back again. And also another thing that I say is that, oh, thank you, Tommy Vincent, for joining. Thank you. God bless you. Another thing that I always encourage people who want to start investing is that start small. Because most people believe that if I don't have so much money, I will not be able to invest. That is not true. You can start from where you are with what you have. Start small. And that is why I always say that even if it's 5,000 naira you have, start. Let me also say this at this point, that you also have the ability, you also have the opportunity to also invest in foreign shares. That you can do with the online platforms, but you have to carry out your due diligence to ensure that that online platform is a good platform. It is registered and it is a good platform before you start investing with them. But that way you can also start your investment journey to buy foreign shares as well. So I have said, have your goal. I have said you can start small and be consistent. I have also said that try to reinvest what it is that you have. Reinvest. And another thing is that don't forget, don't follow hype. Don't follow rumors. This is what is happening, and then you do that. Another thing I always tell you is that review your portfolio. Always review it. As it grows, review it. Is it actually what I'm doing? Is it actually in line with my goal, with what I have set to do? And I want to hear from you. Have you started that investment journey? Do you have shares? Let me read in the comments. And if not, let me know why you have not started the investment journey. So I also want to quickly look at the types of investors that we have. There are different types of investor, and from what I'm going to be discussing, I also want to hear from you. What kind of an investor are you? There are different types of investor based on certain things. Number one, your behavior. How do you react? Number one, your goals. That's number two. The third one is your risk tolerance. Let me ask, if you put money in the stock market, are you always going to ask, oh, what is happening? Or you hear something, that a company is not doing well, something has happened, and then your heart keep beating. You're not able to sleep well at night. It would determine, your answer will be able to tell us what kind of investor that you are. So let me quickly list the kind of investors that we have. Ask yourself, what kind of investor am I? Some are, you can be a combination of these type of investors. Oh, have your goals, start small, be consistent, don't follow hype. Fantastic. So the type of investors that we have, the very first one we have is the conservative investors. This kind of investor, in their mind, what they want is just the safety of their investment, is the safety of their money. They consider and put first the safety over the kind of returns that they get. So this kind of people are people that maybe they are retired, retired people, that all they just want is that, look, the money I have put here, I want it to be safe. I want it to just be bringing me returns. But what I'm after is it is safe. So this kind of people, they think about safety over returns. They invest in low risk assets. There are some assets, as we go into this class, we'll realize that there are different categories. There are different sectors in the stock market. Some are very, very conservative. What they do is just to be giving you little dividends. Some are risk. Their dividend payment is very high. But at the same time, these companies may be very risky. So these conservative people, all they are just about, like I said, is that, look, they're just about safety. They're not so much about the kind of returns they come. So they avoid risky stocks. They avoid volatile stocks. Like I said, the retired person usually are conservative investors. Another kind of investor that we have the aggressive investor. This person seeks high returns. They seek high returns and they take risk. Their own is just, I want this money, I want it fast. I want it fast. And you have people who will tell you that, look, I want to just go into crypto. This is just an aside. They are so particular. I just want to go into crypto. I want to go into Forex. These are people, their appetite for risk is very, very high. So what they want is just, look, I want high returns. I want high returns. I want high returns. These are aggressive investors. Another kind of investor that we also have is the value investor. These value people, what they do is that they look for shares that are undervalued, right? They are undervalued. They look for good companies, but these companies are undervalued. So if, for instance, maybe this is a stock, and then this stock is going for 10 naira. They see that the stock is going for 10 naira, but in actual fact, they believe that the value of this share should be 20 naira. So these are value investors. They look for stocks, shares that that don't actually reflect their true value. So these are the people that we call value investors. And somebody like Warren Buffett, he's a value investor. So they look for companies that don't really say their true value. They buy it and then the key into it. So that is what they do. You also have companies, investors that are what they're about is growth. They look for companies that have the potential to grow. So that is what they are looking for. They are just after growth. They're after growth. They're after growth. And like I said, you can be a combination. You can have a combination of these indices that we have talked about. You can decide to you can be a conservative, at the same time a value investor. Another kind of investor that you have is speculative investor. Yes, and a lot of people miss this. They miss this. The speculative investor, what they do is that they try to time the market, and at the same time they also try to time. So they try to buy stock when it is a particular amount, when it is low, and when they see that stock has the opportunity or the potential to be high, they key into it, and when it is high, they sell off. So that is a kind of another investor. So ask yourself, let me ask you, and I want to read from you from the comments, what kind of investor do you think you are? The kind of investor that you are will determine the kind of shares that you will go for. So you need to know who you are. You need to know what you're doing. And this will help you to determine, fine, you are conservative, at the same time, you are speculative. Okay. All right. So that means you must have a good grip of what the market says for you to be a speculative investor. So quickly before we go on, I want us to look at the various sectors in the Nigerian stock market. So I'll be looking into my book so that I don't forget any. You have the financial sector. This is where you have the banks, insurance companies, and you also have the mortgage institutions as well. So that is one sector. The second sector, you have the consumer goods sector, where you have your beverages and food. And then beverages and food, those ones are under there. You also have your household goods and personal care products. The reason why I want us to quickly look at these key sectors is that when we begin to talk about diversification, you can look at it and determine how you can buy your shares. One of the essence of this class is to help you so that you can be your own stockbroker. At least you are starting out, and you can also talk and you also tell your stockbroker, look, no, I don't want this. This is what I want. Because now you have an understanding of how the stock market works and how to also pick your investment as well. So you have the consumer goods. Like I said, under that, you have the food and beverage. You have like the Nestle company, that is food and beverage. Then you have the household goods and personal. You have the PZ. Those ones are there as well. Then the third one, you have the oil and gas, both upstream and downstream. They are there. You have your Seplat, you have your Oando, you have your Total Energy. That is also there. You have the healthcare, you have the telecommunication, where you have the MTN, and you also have the Airtel as well. Another one that you have the technology. You have these are small companies where you have the fintech, and this is where the speculative or the risk taker will want to hedge his or her tent under this technology. You have the agric, you have the Okumu oil, you have the Presco, yes, that is one. You have the real estate as well. That is another sector. You have the real estate, you have the construction where you have the UPDC, and also you also have the services as well. You have the courier, you have the printing companies, you have the tourism as well. The stock market is actually expanding by the day. So you are having various opportunity to put your money into. You have also what you call the REITs. That is the real estate investment trust, especially for people who want to go into property, but you don't have enough money to go into property. You don't have the hundreds of thousands or millions. You can also start owning property through the REITs. Yes, and then we'll go into that as well. You also have another sector that you have. We've talked about the oil and gas, we've talked about services. So just this is a brief list of the sectors that we have. So another thing that we want to go into right now is when it comes to investing. I want to say this, that all these sectors that we have talked about are not the same. They don't give the same kind of returns. The returns that they give are quite, they are different. So what you may get in the banking sector will be different from what you get from the oil and gas, right? So it is different as well. So let me quickly go into some of the terms that as an investor, it is important that you should know. First of all, or if there is a term that you want me to explain, please, you can put it in the comments and I will quickly go into it. So let us look at some of the terms that as an investor, it is important that you know. The first one I want to talk about, I have explained what the CSCS account is. I said that it is a central security clearing system that an investor has. Another one is the IPO. When you hear IPO, it simply means the initial public offer. That means the company is coming out for the first time, and then it says that, oh, we're coming out to the market, oh, buy. So you have what you call the primary market and what you call the secondary market. So when you hear the primary market, it means that the company is coming out for the first time, IPO. And then the secondary market is from where most of us we buy from, and that is the Nigerian Stock Exchange. When you hear such terms as ROI, that is return on investment, you are asking, oh, so in this particular investment, what is my return? What is the return on this investment? That is another term. Another term is when you hear such things as, oh, the market is bearish. You hear it maybe on TV or when people are analyzing, oh, they say the stock market now is now bearish. What you are saying then is that the things are coming down. So maybe you brought a stock at the rate of 20 naira or 40 naira. Now it is falling down. It is now maybe like 30 naira or 15 naira. So at that time, you say that the market is bearish. The error that most people make when the market is bearish is that they tend to sell. They say, oh, my share is losing money. My share is losing money. And then you see them panicking or calling their stockbroker, oh, sell this thing off, sell it off. No, in actual fact, when things like that happen, we encourage that if you can, buy more of such stock. You'll see later why we recommend or advise such. Another term that you hear is that the market is now bullish. It means that market has gone up. And this is where the speculative investor, when the market goes up, because he is speculative, maybe he bought that particular share at 20 naira, and he heard that the market, this particular share is now bullish. It has gone up. It's now selling for 30 naira or 40 naira. The speculative investor will sell off at this time. That is why he is a speculative investor. He's, timing the market, see how the market is going. So that is what we mean by a bullish market. So these are some of the terms that you will be hearing as an investor. So is there any other term that you have heard that you want me to explain? Okay, so you can still put it in the comments even as we go on. You have heard things like ETFs. ETFs, simply an ETF is the meaning is an exchange traded funds. And so what this means is that they are now listed on the stock market. So what it means that instead of you buying individual stock, oh, I want to buy the stock of GTCO, or I want to buy the stock of MTN, or I want to buy the stock of, what it does is that it helps you. It helps you to buy a combination. So what you're doing is that when you buy an ETF, you are having more shares of different companies in your portfolio. So that is what it means. So instead of you having just individual bank, you're having a collective of banks, or you're having a collective of other companies, depending on what the ETF is all about. So another advantage of this is that it helps you to reduce risk because it is diversified. So you are not buying individual stocks, you are buying them in bulk. So it's like you buying a package deal, and then you also have access to other more companies. So you can start buying that, you can start doing that. So simply, this is generally how the stock market works. So is there any question? This is how it works. So I also want to talk about when you say that some of the things that you should consider when you want to invest. First of all, you must ask yourself, like I said, what is my goal? Why do I want to invest? That's the first thing. The second thing is that you have to ask yourself that this money I want to put into this investment, is it money that I need immediately? And the reason why you should ask yourself is that if you actually want to make money in the stock exchange market, then it is wise, except if you want to be a speculative investor, then it is wise that you leave it out for a while. Before you start enjoying the full benefit of the stock market, you have to leave your investment there for a while. It's very important. You leave it there for a while, except you are a speculative investor. And another thing that I also want to say here, thank you so much, Olachi. Thank you. The class is impactful, and I hope that you have started your investment journey. So another thing that you should also do as an investor is that you must determine, when I say have your goal as well, you must determine, is it for short term, is it for medium term, or is it for long term? It's important that you also determine why, the reason for your investing, the time as well. That will also help you to determine which of those markets that you should go into. So that is another thing that I want to talk about when you are investing in the stock market. And as I said, you can invest in the different sectors, and it's even important that you invest in the different sectors. Any question so that we can start rounding up? Any question concerning what we have talked about in today's class? Any question? How do we start? We have talked about that. It's very easy how to start. We have looked at some of the terms. You have looked at some of the way you can start your investment journey. So are there any other things that you want to know? Simple questions. Let's take the questions before we round up. This class is just specifically or targeted towards the stock market in Nigeria. When it comes to investment, you can invest in different kind of things. You can invest in the money markets, where you put your money into things like treasury bills, where you put your money into fixed deposit. Yes, you might say that the rate of okay, let me put it here. So we can say that the ROI, I've explained what it is, or that is very little, but these are the various forms of investment that you have. You can decide to invest in property, and one of the ways by which you can invest in property is buying from that sector where I have talked about REITs, the REIT, which is the Real Estate Investment Trust. This way, you put your money, you buy a unit of it, and then you have people who are managing it. But that way, you can also say that, oh, I have investments in property. That is a way by which you can. Emma, well done, welcome, well done. If you have any question at this point, because we're already getting to the end of today's class, let me read from you. So, any questions? That is simply how the stock exchange works. And how, okay, another thing I would like to say is, how do I make money from the stock market? Basically, you can make money in two ways. Number one, you can make money when the company gives you a dividend. When the company gives you a dividend, you are getting from the company, from the profit of that company. So what happens is that, and as an investor, I also want you to have in mind these dates. These dates are very important. One, what we call the declaration date. The declaration date is a date by which the company declares that, look, at so time, we are going to be paying dividends. That is the declaration date. Then another date that you also must have in mind is the payment date, and also the qualification date. Thank you so much, Mommy Victoria. Thank you. Amen. I say amen to that. Is the qualification date. The qualification date means that your name must be in the register of that company. So it is a cutoff date. So let me give an example. If, for instance, I am MTN, and at the end of our financial year, we have decided that we want to, we are going to declare we have done so well, and that we have declared a certain records, a financial, we have said that this is the amount that we have made. And then we decide that, okay, for our shareholders, people who have put their money in our company, who have trusted us, we're saying that we are going to declare a dividend. That is, and we're saying that that is today, the 21st of June. That is the declaration date. These dates are important. I'm going to explain why. Then the qualification date, and it means that because every company has a register where they have the names of all their shareholders. So if your name is in the records, the register of shareholders, if your name is there as at the qualification dates may be, for instance, we have declared today that we're going to declare dividend. We're now saying that today is 21st, that your name must be there by the end of 30th of June. 30th of June, yeah, right, is the qualification date. So if your name is in this register, it means that you are entitled to payment of dividend. And then there will be another date, which is the payment date. It could be the 1st of July, it could be the 2nd of July, it could be 3rd of July. If your name is not in the register as at that qualification date, then it means that you are not going to get a dividend. So that is why you see that when a company declares on the 21st today that we're going to pay a dividend, you see that stock, and they say that, okay, maybe we're going to pay 2 naira for each dividend. And it means that if you have 100 or 1,000 shares, it means that 2 naira will be multiplied by the number of shares you have. And that is why you see that once a company declares, you see that the cost, the value of that shares goes up. Maybe the share was 5 naira before. The next thing, because they have declared, you see that the share cost, the price of the share goes up from 10 naira, it might go to 15 naira, it may go to 12 naira, right? So the speculative person might decide that, okay, I have a lot of shares. He may decide that now that these stocks the prices have gone up, he may decide that let me sell some of my shares. And then what he does is that because he understands how the stock market works, he will wait until that qualification date that, okay, they have called it now. Let me give a practical example. I have 5,000 shares in MTN. I'm using this example of MTN because that is the network that I use. And I always advise people that anything you use, ensure that you are not the only one giving them money. Ensure that they also pay you. So I encourage people that buy, especially if it is a profit-making company. So just let me use this example. MTN has today declared that we're going to pay share dividend, and we're going to pay for every share that you have. We're going to pay maybe 50 naira or maybe 20 naira, and you have 5,000 shares. It means that you're going to earn how much did I call it? I'm going to pay 5,000 times the number of shares. 5,000, if it's 20 naira they're paying, and I have 5,000 naira shares, that 5,000 worth of shares, it means you multiply it. So what the speculative investor should do, or a wise investor should do, will wait and sell part of that shares. You must sell after the qualification date and not before. If you sell before the qualification date, it means that you will not be entitled to those shares. But if you wait until the end of the month, which is the 30th, which they have said is the cutoff date for that your name is there, then a wise investor will get both the dividend for those shares and then may decide to sell off part of his shares after that qualification date, because his name or her name has already been there, and that person is also qualified for dividend when it's been paid in July 1st or 2nd. Is that clear? Have I explained? Thank you, ma. I trust we can contact you for further information or taking up investment through your guidance. Certainly you can contact me. You can contact me. I would leave my number. I don't know if I can do that here right now, but okay, I'll put my phone number for the replay of this video so that if you want to get in touch with me, you can certainly do. I'll put my phone number so that when you're going through the replay or in the description, my phone number will be there so that you can get in touch with me. So that is one way by which a smart investor will do. So you get money through the dividend, and then when you pay, that is also capital gains. If, for instance, you bought a share at the rate of 5,000 naira per share, and then the share has gone up maybe to 10 naira, and then you decide to, pay and sell part of it, that is capital gains, because from 5 naira, it is now 10 naira, and then you have made a 5 naira of, I do have your contact, fantastic. So since you have my contact, sure, get in touch with me. Let me say at this point that I also do a one-on-one consultation. I do a one-on-one consultation. I do trainings, I do seminars, and I do coaching as well. So please feel free to get in touch with me. Thank you so much. So that way it is capital gains. And then another thing is that the company also do. Thank you for investing your time in Eledilas. God bless you. Thank you so much, Emma. God bless you. So another thing that companies also do, whereby you also make money, is when they give an extra share. So what happens is that they can decide to declare a bonus. That is what it is called, a bonus. So they can decide to say that for every 5 shares that you have in their company, they're going to give you an extra share. Or they can decide that for every They can do one to one. That for every one share that you have, they'll do one. So if you had 500 shares there, if they are doing a bonus of 1 to 1, it means that automatically from that 5 shares, you have 10. If you had 1,000, you have 2,000. Or they can decide to do 1 for every 2. So if you had 500, it means that you have an extra 250. So it is a fantastic way of, making money. You need to understand how the stock market goes. And don't forget, before you sell, ensure that your name is in the register as at the qualification date, so that when the payment date comes, you can receive a dividend before you start selling off that shares. So simply, this is how the stock market works. So before I round up, any questions so that I can take questions? I also want to hear what other topics would you want me to talk about, because every Saturday 10 a.m. I am coming live. So is there anything you want me to talk about next Saturday so that I can put it down? I wanted to thank you so much too. Thank you so much. I appreciate you. So I want to know what you want me to talk about, because I don't want to be the one just bringing topics. I also want to, it is an interactive thing. This is our community, not just my community. It is our community. So if there's anything you want me to talk about, please let me know in the comments. And don't forget that this live, we'll put it on, so you can go back to the YouTube channel, Modupe Vincent, Money Matters with Modupe, so that you can come on and you can watch a replay. And there are wonderful videos on my YouTube channel, Raising Capital for Business Growth. Okay, let me put it down. Raising Capital for Business Growth. Raising Capital for Business Growth. Okay. One of the things that somebody asked me last week was retirement. So I have that down as well. So there are so many I speak on. This channel is predominantly for women and families. I talk about legal tips. I give legal tips as well. And then money matters is the main thing. So please, I want to encourage you, share this, help empower somebody, let them know. Even as we go towards the half year of 2025, we still have another 6 months. So you need to start putting your house in order by investing, by creating assets, by making your money to work for you, so that at the end of this year 2025, you will know that your finances are not the same. You cannot keep on working and going to work without you making your money to invest. I would like to know more about the protocol if you can. Oh, okay, let me put it down as well. Madrid protocol. Okay, I'm putting down everything so that this is, like I said, it is an interactive community. I listen to you, you also listen to me, so I'll put them down. But what do you think we should do next week? Should we do the question and answer and put down some of these things, or we should just go into one of these topics and then we'll talk about them? Let me know. So you cannot end 2025 the way you started 2025. Please start investing no matter how small. Start investing. Insurance investment. Okay, insurance investment. Thank you. I'm putting them down. Thank you. So please, if you have not yet subscribed to Money Matters with Modupe, please subscribe. Help to grow this channel, help to grow this community. Like it, and please share as well. So thank you so much for joining me on today's topic, on today's video, how to invest in the Nigerian stock market. So it is an easy one. As getting either you do it online, but ensure that online is a licensed and a registered one. Don't just say, oh, I see one online and I go into it. No. Somebody gave us a review of Bamboo here. So please, do your research. And if it's in the traditional one of getting a stockbroker, ensure that that stockbroking firm is licensed. It is licensed. And that is why you have SEC, the Security Exchange Commission. The licensed ones are there so that they just don't go with your money. And don't forget that pyramid scheme is not, or the MMM, they are not investments. Please don't put your money there. They are not investment. Thank you for your time as well. Blessings as well. So once again, please subscribe, share. Thank you. I'll see you at the top, and God bless you. Thank you all for your time.